Good morning, traders from Chicago. It's 8:01 a.m. Chicago time on Wednesday, the 28th of April, 2021. You are listening to episode number 1982. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. It is a snoozer again overnight, just completely quiet. Let's bounce right into the Convergent Trading pre-market summary sheet. Another neutral stance day. We have a mixed bag. Crude oil leading the pack. June crude trading at 63.59, up 65 cents or 1%. The DAX is up. The Euro Stoxx is up, and the dollar is up. The S&P is up just one rotation, 2.75 points. Silver is taking a small pullback, down 34.5 cents or 1.31%. Gold is off $9.20. As we come into this all-important day, the Fed rate decision at 2 o'clock, the Fed press conference at 2:30. The market's in a holding pattern. Some interesting anomalies to discuss overnight, but that's the lay of the land. The cryptocurrencies, Bitcoin, pretty much sideways. I know it says 0.75, but that's pretty much one move in that product. Ether, new all-time highs in Ether, and that's where we stand, folks. So, in terms of looking at earnings, earnings are big right now. We did get some major ones yesterday, but we did this morning pre-open. We got a couple from Europe, Banco Santander, Deutsche Bank. Boeing announced it surprised 32% to the downside, 32% to the downside. General Dynamics announced came in at $2.48 versus $2.30, and then Ford Motor Company, Apple, Facebook, and Qualcomm come in after the close today. Those are ones you want to pay attention to, especially Apple, the monster that it is in the indices. So that's what's up. In terms of what's driving the market right now, not much. Everything's in a holding pattern, waiting for the FOMC. Biden's proposal involves a peak tax rate of 39.6% and the removal of the step-up in basis. Not sure what the step-up in basis means. Biden offers a $1.8 trillion schooling, childcare, and paid leave program. So that's more money coming into the circulation here, and that's it. So let's take a look at what was expected yesterday versus what we got. Yesterday really was expecting completely sideways day. Expected it to push higher, balance out on top of the VWAP, full session VWAP mid and point of control, and then potentially squeeze higher and take out the overnight high at 92.50 for new all-time highs towards 200. That did not happen. The secondary scenario is open, chop, push a little bit higher, and then drop through the prior day's low. Prior day's low was looking for around 70 on the low. Was looking for it to push into the 70 area, the 70-72 stock zone, and then finish right where it started. We got scenario 2 yesterday. Here's what that looked like. Here's the actual. Let's see if we can clean this chart up. It's a mess. Here we go in our review segment. So we open up and we push lower, go all the way down to 65, and then come right back up to where we opened, just as outlined. We did take out the prior day's low, one time framing up on the daily on pause. Now one time framing up on the weekly is still healthy. market that's completely sideways. Delta is negative throughout, but yesterday we saw yet again another day of a lot of supply in the 85, 86 area. There's just a ton of supply there. You probably noticed that it would push up into that area and be offered and offered, and then the bid would the buyers would nibble through the offer, and then it'll be offered for more, and just a lot of icebergs in that area. And also, you notice that as the offers don't finish, they end up sweeping the book down, and then the market comes right back up. We saw that several times yesterday. We saw it early. We saw it in here. It just sweeps down and comes right back up and then just trades there. It just seems like either there's a massive hedge against the long position being put on to the tune of, tens of thousands of contracts, or somebody with a very, very large position is unloading it. Whatever it is, maybe someone initiating a big position, a big short position, doubtful, but who knows? All we know is somebody somewhere is seeing value in selling this thing in the 85 zone. So this is what we got yesterday. Here's the chart. I know this looks like a spaghetti factory, and I'm not a spaghetti factory kind of trader, but it's because the ranges have compressed so badly that everything is just overlapping itself. One thing I wanted to show. In fact, let's go back. Let's go back a little bit. 2 days. You look at what's happening with the relative delta, and we notice that the small caps or the small lots buying, 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 buying. Large lots, this is the yellow. Yellow is large lots. Selling, flat, selling, flat, and then buying on Tesla on the announcement on earnings. And then yesterday, small lots, buying, buying, buying. Large lots, which is the white, sellers, and very large lots, big sellers. These are the sweeps. These right here. What we're seeing here is this constant unloading by the very large lots. These are defined as 100 lots or more. 100 lots or more, and they are actively selling. We see a lot of selling coming in on that size. In fact, my volume scope chart, when I scroll back, which I haven't seen this in a while. Look at that. This is during yesterday afternoon during the active period. Let's see if we can get it. But you could see just heavy. Each one of these dots represents 100 lots or more traded at that price at that moment within the bar. And look at how much of it there is. There's just a ton of selling. And what we do is we sell, we come right back up. We sell the heck out of it, come right back up. Sell a little bit, come right back up. It's really a battle, and we are witness to this, and we are, of course, our job as traders is to manage inventory, right? Like specialists or market makers. We're short term. If you're a short term trader, you're essentially just managing inventory all the time. If you don't understand what that is, let me know. But you're taking on inventory for a period. You're expecting to turn it over for a profit. This is when you get long. You're buying inventory, and you're looking to turn around for a profit like a supermarket does, or a car dealership, or whatever. That's basically our function. We provide liquidity and stability to the market. That is what we do. Here's some big size going off here with with very little going off on the opposite side. We're just seeing a ton of this, and I don't have an explanation for it. I have no idea. I'm not privy to what these larger players are doing, or funds, or whatever. Futures are a hedge product, and it's somebody's using it to get that job done. So I'm not going to pretend to know what the heck is going on there, but I just know that there's just quite a bit of supply there. Coming into today's session, we basically open pretty much where we close, and we just go completely sideways. The overnight point of control today for the current overnight session is the same price as the overnight point of control for yesterday's session. The VWAP and mid are about the same price they were in yesterday's session, during yesterday's trader bite. We took out yesterday's overnight low by 2 ticks. We did not attempt to push the high. We have a bit of a ledge up here on the high. Where is this ledge? This ledge is at 85. It's that price that's getting a lot of supply. Between 84 and 85, we're seeing a lot of supply. And so the overnight session is really not encouraging in terms of expectations coming into today's session. So just like yesterday, temper your expectations. Just let it figure out what it wants to do. Let's see which side has the ball, and let's run with them. Okay. In the overall picture, one thing you must note is, again, I talked yesterday or the day before about the fact that there's a lot of days have closed between 41.59 and 41.75 or so. This zone here has seen several closes. I'm not drawing these lines straight, but what we must note is that we've had a nice run up, and what we're doing is we're flagging near highs. This thing can continue to flag here for quite a bit. We're just not letting go of those high prices. We're just not letting go of these all-time highs. And although I'd like to see us correct a little bit and clean up the poorly auctioned areas. You can see that in a composite here, just poorly auctioned areas throughout. We have gaps underneath and stuff like that, all the way down to 39.55, 39.60, 70. This area down here, which brings us into the 50 SMA right in here. This is where we have a nice base foundation for the next run up, and we are just hanging tight. I mean, the range is awful. The range is awful. Look at Monday's range. This is Monday's range. This is Tuesday's range. Terrible, really terrible. So as the market corrects a little bit, it'll expand the range, it'll expand volume and give us some more opportunities, of course, for gain or loss. Those show up together, hand in hand. But just don't lose sight of the narrative, and that is we are not giving up these high prices. We're just not moving away from these high prices. So that's what I wanted to cover. As far as the heat map's concerned and the order flow, it's quite a mess in the overnight session. You could see here the mid VWAP are right on top of each other. These are full session mid, full session VWAP right on top of each other. There's stuff in this area here. You can see my notes, my key levels, the stock zones and stuff in the notes. And as I move up and down, I'm not seeing anything outstanding. You could see there's some size way up here, 262. But look at the MBO data here. The blocks, they're very scattered blocks. I'm not seeing something with a big block, maybe here. It seems very scattered. Look at the order flow beneath. Down to 72, we might have enough of a block size there to mean something, but here's a bigger offer, a bigger bid, but it's chopped up. You can see it's chopped up. We're not seeing the dark blue are single blocks, are block orders, large lots. This it's very important to be able to see that, especially if you're a short-term trader. Just noisy book. Look at how messy that is. It's really messy. The heat map is really messy, and so I'm keeping my hands off. I don't know what you're doing, but I'm keeping my hands off today and just waiting it out just to see what sets up. Let's take a look at what we're expecting for today. Okay, so here it goes. So today, again, not high expectations. We have the FOMC at 2 o'clock Eastern, 1 Central, and then the conference call at 2:30 Eastern, 1:30 Central. So 1 second, my laptop is lagging a little bit here. So we have a lot to cover early on just to auction out the ranges in the overnight session. Expecting an open auction today, again, expecting it to drop again, expecting it to challenge the 75.75, push into value low of yesterday, consolidate here, come right back. And this is likely to put us back at the open before FOMC kicks in. Okay, so FOMC kicks in, and then from there, of course, who the heck knows? 4,200 plus becomes the key magnet up above, and then below, it's to get below last week's close and to start traveling through these ranges. So we have this big box up here that we've been trading in, and we are likely to squeeze through since last Friday. We're likely to squeeze through and below. Once we get through the 67 here, we'll likely see ourselves below 41.50 relatively quickly. That's scenario one. Again, I don't know which direction we're likely to go with the FOMC. If I did, I'd be running a pretty big fund. But the secondary, an open auction that pushes higher, attempts the 86, gives us the overnight high, consolidates, comes back, sits in the middle until the FOMC, and then you have the same track for scenario two. Okay, so I don't have much more than that. It's FOMC day. Anything could happen. We're likely to see maybe an hour to an hour and a half of action, and then I expect that it'll start grinding sideways, and folks will position early for the FOMC, and then it'll just sit and wait for the news to come out. Okay. Are you gaining something every day you're here? For those of you who've been here for a little bit, I know that this is all repetitive, but that's how all jobs are. That's what it is. That the parameters and inputs change over time, but our process is repetitive. That's, in my opinion, that's what causes profitability. Is you have a routine, you have a cycle and a process, and you just repeat it and repeat it, repeat it and repeat it again. And the results hopefully take care of themselves. Okay. Good luck, everyone. I'll catch you guys tomorrow. We'll talk about the FOMC results and what has happened. Expect volatility to increase at least temporarily on the FOMC, and then look out for that three move resolution of the FOMC: push, pull, and then this is the real move. This is the one we want to be on if it decides to go up. So look carefully for how they respond on the FOMC release. That first push is likely to be the continuation move later. Good luck, and I'll catch you tomorrow morning. Take care.